So the Bulls are not fixing the chart, and the question is, are they naturally going to get fired because their poor performance? As we've seen in the last two trading days of 2024, it was a complete and utter bloodshed out there. The Bears were kicking their butt every single day. Apple now has shed a massive amount from its all-time highs, right? The biggest cap stock is down 6.28%. Does that spell more for the market, or is this just a big trap for the Bears like it was for almost two consecutive years, 2023 and 2024? Let's dive in and find out exactly what we have to close above today to know if we need to be bull side, bear side. Now, let's talk about and recap the S&P first. The S&P has been a bloody mess for the past couple days. We have established several new lows, which is, number one, the most concerning thing in the market. We blew out the low going back to Jerome Powell's comments. Okay, so we've now come down today, or previously yesterday, and blown out the complete low. All we have managed to do is reclaim the 50 and lose the 50. This is not a good sign. This is not a show of strength. The way we would expect to find buyers, we didn't. We didn't even we have a double gap fill that we did not fill for a couple of days. So Friday, really, you need to get back above 520.92 on the market. That would be an insane day, considering that would be a 1.5% day. And is there any news to necessarily catalyze this going into the market towards the end of the year? Well, maybe. Again, we've seen where the Bulls have taken the ability to take any news day. We do have Barkin speaking at 11 o'clock. This is the first Fed member since the last FOMC decision. The Fed has basically been staying very, very quiet, which is very uncanny of them. And subsequently, could we get some insight of bolstering? I feel like the market is just waiting for a bullish news to give them some relief. As we saw, we were pretty much pushing up in futures last night, and then we got 2.6% on the Atlanta Fed GDP now, and the market just nosedived right after that coming out. I don't believe we're going to get another revision today on Friday. However, we're going to get ISM. ISM has historically possibly moved the market. They have basically moved one way or another. And the question is this something the Big Don wants? Because again, he's coming back in 18 days to be continued. And the markets, all they've done is sold off. Let's jump to the annual candle so you guys can see. And this is something that we were actually looking for per se. Because if you measure from where the candle opened to where you would get the wick, right? We talked about this in the weekend deep dive, link in the description below if you guys missed that one, where we got all these levels. We're down 1.5% on the candle open, right? And I'm going by the wick. So hypothetically, if we got a nice green candle on the 12-month, we would see a nice push higher, right? To all-time highs is 3.38% from the candle open. That would be a nice push on the S&P. 1.51 already established possible wick. Now, could we go down lower? Yeah, we could actually go down all the way to 479. That would be a mess, right? That would be a considerable mess in the markets as we've seen before. And throwing all this back at you guys, as we can see here, we're now targeting either the complete gap fill of this previous gap that is established here. We've kind of been toe dipping into it over the past couple of days, right? We got a big fill on this last one at 581, and then subsequently this 200-day moving average comes into question. Yes, we could definitely come down there. That would be from all-time highs, the 10% correction approximately, right? That would be our standard correction. You probably dip below maybe 550, and that would be your 10% correction that you traditionally get the year. But my thing is, why do we have to go all the way down to 550? Why do we have to go down all the way to 565 to necessarily find buyers when we should have found buyers right here? We should have found buyers at the 50-day moving average. We had a double gap fill to the upside. If the bulls were here on the chart, you should be buying this chart, considering that we had a capitulation style volume, almost a secondary one here, and now the big traders are back in town. And this isn't going in the direction that none of us thought we're expecting. Again, if you go back to bear markets, traditionally, this is like the PTSD moment for all the bulls out there. Gap ups are traditionally for selling, and in bear markets, you traditionally gap up in the morning and sell off through the day. What did we do today? Let's go to the 15-minute chart where we closed yesterday, right? We gapped up and sold off. So that is extremely, extremely concerning that we are in this region and we basically bounced around our not our all-time high, but previous year's close. and subsequently lost it, right? The news came out at 12 o'clock, GDP numbers, and boom, right to the floor. And subsequently, we're not necessarily looking to be in the best shape coming into the futures open today. Now, let's talk about the NASDAQ, because I also want to cover that for you guys. And we're going to talk about some of the other ones. But what was concerning with the NASDAQ is we lost the 50 on the NASDAQ now. So we're below the weekly low. We're below the previous low. We're below the 50-day moving average. That's 3 strikes. That's not a good place to be. We're not in a good place on the NASDAQ, especially. We blew out the low, right? There was no consequence given. However, the bulls did step back in to buy it back up a little bit. Let's go to the 15-minute chart. As you can see here, yeah, we blew the low out and then bought back up into the close. That could be shorts covering. Again, you're down 6% from all-time highs. You're going to have shorts covering through this period as we go along with the markets. And really, no one can attribute this to be like the bond market. This was just pure selling. If we look at the bond market, we can clearly see the 2-year didn't move much. We can see the 10-year, 20, not really moving, right? We see this, even the 30-year kind of. But I want to bring your attention to TLT. TLT has basically gotten slaughtered the last couple of days, and it's gone to this point where this previous gap, we're sitting around $86 a share. It's trying to form a bottom. And we're going to talk about one more thing that's trying to form a bottom. That's going to be very, very crucial. But it's like trying to round out the bottom. But I'm like, bulls, you have to step up and buy this chart. If you do not buy this chart for simply the S&P, right? Let's just go back to this. Where do you have to get back above? At minimum, you need to get back above 587. You really need a nice day. You need a good 0.6, 0.8 day. You need to close resoundingly and be on your way up to fill those gaps, get above the 50-day moving average, and keep going higher, because it has been an abysmal failure. You're about to get fired, and the NASDAQ, everything is just horrible, right? Now, the only thing that, this is the mind-blowing part, is that the Russell hasn't moved. This thing literally just sitting there, just burning theta all day long, and this is why I'm saying I'm not convinced we're going to establish the lower lows until the Russell does. When the Russell breaks 218, yeah, I'm going to give up on the pipe dream of this not being a basically catastrophe for the bulls. However, this is keeping hopes alive. And other things that are keeping hopes alive is like semiconductors. If we look at NVIDIA, not really going down, just consolidating around here after the latest push. AMD trying to form that bottom around here. Meta, again, bouncing off the 50, going higher. This is something you want to see, not establishing a weekly lower low. Actually did, but has now considered a failed breakout above the 50. Those are all things we want to see. We don't want to see stuff like Microsoft, right? Below the 50, below the 200, just this is bad, right? Case in point. And again, we want to see this rotation in the markets, as we saw with Apple, right? This is just crap, right? So let's see. Weekly lower low established, didn't even touch, right? We opened Monday, and that was or we didn't even open Monday there. We opened Monday, we got a smidge of volume in the weekly higher high, right? Establishing the weekly high or low, or salvaging it, and then whoop, right down, right? With volume, with momentum, as people were buying it up when the S&P was dying, right? So Apple, I'm looking at this, I'm saying, okay, 237 coinciding previous resistance, right? Previous all-time highs, double tap there, come back down to resistance. That's going to, or now support, 237. That's where I'm going to revisit Apple. I got out of my Apple position for a slight loss. And a Tesla, that was just a speculative position I shouldn't have taken. And I paid for that one, right? But they came out with their EV sales being lower on a yearly basis. So everyone's like, hey, no, sell this thing. Maybe we'll touch you back at 350. But right now, you're in no man's land with two or several gaps. You got a gap here, and a gap here, triple gaps. So am I touching this thing with a 200-foot pole? Absolutely not. What's the next concerning point is the VIX looking like it still has some life. I need this to be beaten bloody into pulp, right? That's what we want to see on the VIX. We want to see this thing basically get hammered down to this $12 area where everything's calm, collected, and the markets can start thinking rationally and going back up, as we've seen, because none of this has necessarily been catalyzed, right? You had the overreaction, in my opinion, to Jerome Powell's comments, and they're just basically just selling from there. You've established a fear mentality in the bulls. They're not willing to buy the markets because their precious savior basically told them, well, you're not going to get as many rate cuts as you thought, right? They've run this market up on less. However, I'm not also blind to the fact that we could be getting a massive haircut, and that's not going to be enjoyable in any way, shape, or form. Other things like Bitcoin just holding steady. So you got the Russell Bitcoin holding steady. And also the one other thing that I want to point out to you guys is RSP. RSP is trying to form a bottom, meaning that the S&P and NASDAQ, which are heavily influenced by the mega cap stocks, aka Tesla and Apple, did take a beating haircut, and coincidentally, RSP kind of, which is equal weighting S&P, every company is weighted equally, versus the S&P and NASDAQ, which are not. The mega caps are weighted more. This is saying, hey, we didn't establish a lower low, we didn't establish, so there's hope, right? There's hope that this thing fixes itself. And also, we can see some of the buller banks, right? I say buller in the sense of what their earnings expectations are. JP Morgan above the 50, above the annual close. Wells Fargo fighting for that annual close, trying to get back above the 50, consolidating here, sitting up into earnings, which is in 2 weeks, right? And we get job numbers next week, so that could be some catalyst going out into the market. If we look at others like semis, right? I opened an AVGO position today, and that thing just said, nope. I saw AVGO was green, and I'm like, oh, okay, well, market's natural, and then 12 o'clock rolled around. Great timing, guys, right? But anyway, still above the 9, still above the previous week yearly close, so let's see where this plays out. My concern is Apple could drag the market down. That's simply put. You really want to see those Apple bulls step back in, but I'm not really confident in this, guys. I'm more confident in this coming back down to 237, considering all the indexes have been pushing down. Again, you don't necessarily need Apple to rally the entire stock market, but it does help. And going back to this, right, we talk about the economical, but again, fear and extreme fear. We don't necessarily sit down here all the time. So the thing is, Warren Buffett has told us, when there's fear and blood in the streets, this is where you buy, and no one is buying. So the question is this going to hit extreme fear and keep going down? Are we basically not going to see anyone buying the market back up? And coincidentally, the reverse repo fell down to 239,000. I wonder where that money went. Throw in the comment section, guys, below what you think that money went. Do you think the Fear and Greed Index is going to be back at greed anytime soon? Throw in the comments when you think it is. Are you going to think we're going to hit all the way to neutral with a magical rally today, or is it going to be a slump? Throw in the comment section below. I want to hear your thoughts. And as always, guys, make sure you check out the video over here for the latest video that we've posted. Thank you all so much for watching, and I hope to see you in the next one.